What's up guys, welcome back to another video and thank you for being here. Today we going to talk about when the IFVG fails and how to know that the inversion fair value gap will fail and how to know if they're gonna work or not and all of that. These examples I got them from the backtesting session that I've done using IFVG replay, and if you want to use IFVG replay, please use the link down in the description below. You can get 15% off using my coupon code Kemo, and you're gonna find the link down in the description below. So before we get started, just remember, if you like the video, please leave a like on the video because that actually helps a lot, and subscribe to the channel if you are not already yet, and let's go ahead and get started. So example number one here, this is an example of a working setup that it did work for about $25. There's nothing too much to talk about here, so I'm actually going to ignore that setup and I'm going to focus on trades that are actually kind of failed. And those example, I got it from the last live streaming session that I did backtesting in front of you guys, and this was actually the first time I'm doing backtesting in front of you, and it lasted about like 2 hours or so, or like an hour and a half, and it was pretty intense. And towards the end of it, I took a lot of kind of like unnecessary losses that I wouldn't actually do that on live accounts, and this is why I'm doing this video, to kind of explain why they were bad setup and why they failed. So this setup here, this setup was pretty good setup. It kind of worked for $13, and you would have put stop loss at break even or scaled at the $13 level after the market moved $13. And what this is actually right here. So let me actually draw here. This is the buy side of the curve here, and this is the sell side of the curve here. And when the price went up, the price was supporting and respecting bullish order flow here, and it kept going higher and higher. And right here, this is the slowdown of the market, and the sell started right here on this inversion fair value gap here, which I did not take or anything, but I'm just explaining my thoughts here and how the market maker sell model starts to kind of like form, and how you first identify the market maker sell model or buy model, doesn't really matter. We got a confirmation that of this is an actual market maker sell model when we inverse this big bullish fair value gap right here to the left. Right at this moment, this is a confirmation that this is a market maker sell model. So where should we be targeting? We should be targeting this low right here, and then this low right here, which we did not actually take out this low right here, which is the target and the finish completion of the market maker sell model, and we started to displace after taking just this low, and this setup actually failed. So I'll show you what it looks like here in the second page. So this is the same setup. It actually failed and started to go higher. Now this is the third setup, and it did fail. Why did it fail? Well, first of all, you gotta look at time. Where are we in the session? This is kind of like towards the maybe the mid of the AM session, and market maker buy model and sell model already happened, and then we formed another one here, market maker buy model and market maker sell model here. But the thing with this is I'm pretty sure that there might be an SMT on this low or something. Anyway, we started to react from this right here, from this IFVG to the left right here, and started sending the price higher. Anyway, this is a risky trade and a risky place to take a short from. Where you should have shorted is right here after breaking this IFVG, or actually after breaking this bullish fair value gap, and the short starts here. You take it on this candle, and by this move here, by this level, you should be probably out or scaled already, and your stop loss should be at break even. But this trade right here, this short idea, I don't know how I took that short, probably because I saw that we maybe inverse this last bullish gap here, and then came up here and then inverse those small ones, it's not really that good of a setup. I would actually wait for a more confirmation, or actually skip this whole trading session altogether, because there's too many setups that already happened and you're so late in the session and missed a lot of trades and want to force a trade. That's not actually a good setup. The fourth trading idea, this actually worked to maybe $30 move, which is pretty good. But I think on the live stream, I took that trade as a break-even trade. I was doing a lot of kind of like unnecessary stuff, and I wasn't taking too serious the live stream or that backtesting session. But I'll try to make really good and serious live stream in front of you guys, and I'll show you how I do it. Just gotta remember that that was like my first live stream, or not my first live stream, but first backtesting live stream in front of everyone. And actually, well, it didn't really go as I planned it or imagined it, but it's fine. Right here, this has worked. Why? Because look right here, this is bearish fair value gap on the left here. The price respected it to the tick on the 5 minutes here and 15 minutes here, right? So we're still bearish until we break this to the upside. So we did not break it to the upside. We still respected it. And the sell curve and the sell model started from these right here, from these big bearish fair value gaps that inversed those bullish gaps right here. And I took the sell right here. Stop loss above here. Yes, it's too big for my liking, but I was trying to test this idea, and it did work to an extent, taking out this low, which was perfectly fine, and already moved to 30 bucks. I did not scale. You should have honestly scaled. If your take profit was 30 bucks, that would even be better, but I was just going for RR play here. Fifth trade idea, this has failed. Why did it fail? We'll talk about it. So price is bearish on the 5 minutes and the 15 minutes. I clearly see that it's bearish, and I decided to take a buy. That's why it failed. And the second reason, we are in consolidation. So look right here, between this high and this low, this is a market range. That's the price range that we're trading, dealing range that we're trading inside of, and it's not really high probability to kind of like take any trades in between that trading range until we break one side, and then we decide where we should be going. But I did not look at the bigger time frame, which is the 5 minutes and the 15 minutes, which completely looked bearish to me. But I did not maybe pay attention to it closely, because again, I was on live streaming. I was already tired. It was at the end of the day, and I was just so kind of like one advice, guys: if you are doing back testing session, don't try to go for a long time and keep practicing and keep back testing for a long period of time, because you'll actually get like kind of like tired and exhausted, and start taking unnecessary trades, setups, just because you want to speed run it and get it over with and just get your data populated. But this will actually be worse, because it's the same exact feeling as if you're going to go and get an evaluation account or a challenge account, and then trying to speed run it and make money so you can pass it all in 1 day or 2 days or a month or a week, and then end up failing the challenge. That's the exact same feeling. So please, when you're back testing, try to take it slow. Maybe an hour every day or every week will be ideal, instead of just try to cram everything in one session. So again, this one failed. We are in a dealing range right here. 5 minutes, 15 minutes looks bearish to us, and I decided to take a buy in consolidation area, and it was also near market open, so I was not a big fan of it. And this one right here, this is a second trade idea. It was in the same consolidation range. We never left that dealing range. That's the same day. So if I go right here, this is 7/2021. This is 7/2021 of June, and the price never left this consolidation. And as you can see on the bigger time frame, 5 minutes, it's pretty consolidating, pretty bad. giving you like a pretty bad chop here, and I decided to take another buy to this. I think the target at the time, I think it was equal high or something, or relative equal highs. I decided to take the trade, and it was a bad IFVG, and the PA was trash, so that's why it failed. And this is why this video is about, is understanding when you should be taking the IFVG plays. Not every single IFVG will work, or not every single IFVG will deliver you to the break-even line or the break-even stage of that trade, because simply if the price is going up and down, up and down, up and down, up and down inside of a dealing range, of a trade dealing range, and it's also a Monday, so I'm pretty sure this is a Monday no news, guys. So again, the price moves how it moves, it will give you a million reason why you should take a trade, and it will give you a million setups of IFVG or inversion fair value gaps. But this is how you can tell that the IFVG will fail. This is how you can tell the inversion fair value gap is going to fail, and it's not going to be respected or push the price or support the price up or down, or resist it or whatever, or anything like that. This is the 7th example here, and again, this failed, and the reason why it failed is because I had the wrong bias. Bigger time frame, it's completely bearish. Yes, we were supposed to go up here to this bearish fair value gap to retrace, but there was actually not a single clean setup to bring us there, and the price decided to consolidate. I did see these bearish candles, and I assumed on the 30 seconds chart there would be maybe some sort of a clean bearish fair value gap, and then we're gonna inverse it. So I took the trade right here, which actually, even if it gives you a trade on the 30-second chart, this is kind of a little bit late in that leg to try to take the price to the bigger time frame. And this is completely bearish. So what you could have done better is wait for a retracement to the 50% equilibrium line, or to retrace to that bearish fair value gap, right? And then take a short position, because the short position here will be even safer and more higher probability than taking a long setup. And although the long setup never kind of showed interest or showed a clear move to the upside, I still took it, and that's why it failed, because I was just playing with back testing. I wasn't taking serious as I should have been. Example number 8. This worked to $25, and I tried to go back to the video, guys, and I took a lot of screenshots, and this is why I was like trying to put it in my notes, journal it, and to understand and to get a feeling of when the IFVG breaks or fails, when the inversions kind of fail, and how the inversion look good and I should take it, or versus how the inversion fair value gaps that I should be avoiding. And in all of this notes, I tried to kind of like annotate and bring the bad examples, and you need to analyze the losses before the wins, because the wins are pretty easy to identify. But if your win rate is bad, then you should be looking and focusing on minimizing the amount of losses that you take first, before focusing on the amount of good setups that you should be taking. So if you minimize the risk, if you minimize the amount of losing trades, then you should be good to go, and your win rate will get better and better. So this trade, it looked pretty good. Yes, we were kind of chopping here, up and down, but then the price kind of pushed down and left order block here. And this is where I started to question myself. If we left a bearish order block here, that means the price is not going back above here anymore. And I looked to the left here, I saw the fair value gap and the inversion fair value gap was resisting the price to go any higher. And we also, on the move up, we left a kind of obvious and clean fair value gap bullish, and then we inversed it. Once we inversed it, I took the trade here and stop loss above here just because of the chop, and we had sell side liquidity down here, but the price decided to go lower towards the drawn liquidity, but did not fully go through and take that sell side liquidity. But $25 of a move, it's not a bad move. The price already moved a lot. On a live account, we absolutely could have taken partials or scaled in, or even taking just the full $25 move and that's it, and close the trade. But of course, backtesting is different. We treat it different. That's a good trade that we took. That was a buy position. So I want to maybe talk about this one. So I did not take this trade idea because of one reason. Here we had sell side liquidity where the sell curve should end after taking this liquidity right here. But the price did not take out this liquidity, decided to react from the last bullish fair value gap of the leg, and then giving us the strongest PDA of the market of just 3 candles pattern, one going down, consolidating, or kind of like indecisive candle, and then an inversion right away with a big momentum candle that will deliver you to the TP. Whether you're bullish or bearish, we should have been going to the upside to retrace, to go down, or to fully reverse the move, and this is what happened. I did not take it because we did not take out the sell side liquidity first, and confirming the end of the sell curve of the market maker sell model. Of course, there could have been a SMT between ES and NQ. I was not looking at ES, I was just looking at the big time frame of the NQ, and that's it, and just taking my entries on the 1 minutes. Example number 10. This failed, and this is a horrible price action because of one reason, or actually 2 reasons. The first reason, horrible price action, and it just consolidating a lot. The second reason, there was no reason for me to take this trade from the beginning, but again, I imagine that these push down was maybe on the 30 seconds bearish fair value gaps that we got inversed with really big momentum candles, and then we fell right through because the market is consolidating. It looks bad, chopping up and down, and yeah. So this is why it failed and why you should not be trusting this trade. Maybe you will also question yourself why this failed to the upside, because I mean, look here, this is a bullish reaction, right? And then we got this inverse. Why did we react from this level? You gotta ask yourself, did we sweep any liquidity to cause the market to go to the other direction? Are we delivering from anywhere that the price should react from this level or from this PDA and then go up or down? The answer is no. Price is clearly consolidating. Even when we went up here, we didn't even sweep this liquidity up here. So price is clearly consolidating. You should not be touching this PA or price action, and that's the end of this story, right? Number 11 here, this is one of the kind of working trades that I took, and this one I actually took. It was too high in premium. For some reason I did not like it as much, but it was an A+ setup for me, and I even got in this trade a little bit late. But yeah, this was a delivering from a fair value gap, sweeping liquidity, and a bullish inversion with a good momentum candle and pushing the price to the drawn liquidity. It was pretty good trade, and as you can see, this is a 5 minutes fair value gap that we were holding down there. This is the last example of this video. This failed. Why did it fail? I think at this point it's self-explanatory. Look at this price movement. Beautiful, beautiful, beautiful trade idea, and I decided to take a short right here. Like, what the heck, bro? Like, that's so stupid of me. Again, it's kind of like getting your eyes stranded at looking the screen too long, at focusing too hard, and at just trying to speed run and get the backtesting over with. That's one thing that a lot of people, and I know a lot of people are guilty of trying to speed run the kind of like the back testing session. So again, guys, this one failed. Yes, it did, because of one reason: price is chopping. You should not be taking any trade. If you are on a live account and this is a live price action, would you touch this trade? Absolutely not. So therefore, that's basically all the losses that I took. It was, I think, 12 losses. Some of them were break-evens. Those are the 12 examples that I wanted to review with you guys, and not to make myself look good or tell you, oh, I'm a good trader, it just I lost. No. Yeah, I went ahead and did a live stream. I lost a couple. My win rate was horrible for one reason. That reason is I was not too focused. But what I gained from this live stream and from this backtesting session is for me to identify and to like get my eyes get used on which IFVGs are better than the other, how to identify and predict and expect and anticipate the IFVG to be failing, how to anticipate the inversion fair value gap that will fail, and how to expect and should be taking the good trades only, the one that looks good, has good confluences behind it, has a good narrative behind it, and aligns with your bias, bigger time frame, and all of that. This has been kind of like a quick review of some of good losses that hopefully will make everyone better trader. And kind of like a lot of people have been questioning, when do IFVG fails, when do inversion fair value gap fails, how to identify bad IFVG versus good IFVGs. This is exactly the video for you guys. So that's been it for this video, guys. Thank you all so much for watching. I hope you enjoyed this video. If you found helpful information from it, please leave a like on the video, subscribe to the channel if you are not already yet, because we're about to announce a really good giveaway pretty soon here. And thank you all so much for watching. I will see you in the next one. Peace.